All right, let's go ahead and just get started. We will continue to admit people as they trickle in here, but we've got a lot to talk about today and could not be more excited to be having this conversation with Mr. Tuyo here, CEO of University Credit Union. Just to give a brief introduction for you, David. Knowing you for the brief amount of time that I've had the pleasure, I know you've been an impressive leader in the credit union space for a long time now, stretching back for the better part of the last 2 decades, leading various credit unions and various leadership roles over the last 15 to 20 years. And I know most recently serving as CEO of University Credit Union. And University Credit Union, for those of you that don't know, is based in California. It's a major credit union for a lot of the University of California universities, as well as the official credit union of the Big West. And so could not be more excited to have this conversation today about digital assets in the credit union space with an esteemed leader for credit unions. So got a lot to talk about. We will go ahead and dive right in. I won't bore you all with my background, but just briefly, I guess, before we do jump in, I am Kian Sarreshteh. I'm the co-founder and CEO of CryptoFi. We are a digital asset vendor in the credit union space specifically. So it's been an interesting last year for both credit unions and cryptocurrency. I would say particularly the last 3 months with events that we are all too familiar with, but before we really jump in and talk about current events and what's happening today, wanted to take a step back. And cryptocurrency has been around for really since 2009, and I've seen, being in the space for the last 7 years or so professionally, a lot of people really got their interest sometime in the last few years. But David, you seem like a trailblazer in this space. Could you just start by letting us know what got you interested in cryptocurrency, how long you've really been evaluating the space, and then what was really your ambition to get ahead of the adoption curve to drive this for University Credit Union?
That's great questions. That's like a 27-part question there. I'll try to do my best. But I appreciate the comments. I mean, definitely more reflective of my team at University Credit Union. Really special place from our board of directors through the entire team that we've been building over the past few years, and so it's just great to be here. Great to see you again. With regards to some of the questions, kind of what led us on this path. I mean, personally, back in 2009, definitely skeptic. Definitely thought it was going to be a fad. Didn't see how the application was going to happen. Was excited about some of the underlying technology, but kind of just left it on the fringe and never really brought it into the center. And then over the years, kind of been tracking it more and more and more. And then as we got to university, obviously based in California, something that's interesting. Do you know where California ranks in crypto ownership in the United States?
I should know the answer to this question, but I don't. I would guess it's a high percentage. Is that accurate?
So obviously in the whole U.S., numbers keep increasing, right? So you look at crypto ownership or at least participation through trading or transactions in the United States, you see that of the percentage of adults, the range is somewhere between 21 and 27% based on the most recent data I've seen from like NBC News or CNBC. But recently, this is in January, CNBC came out and ranked states by ownership of crypto. And I would have bet California would be number one, right? I would have said, we're number one in a lot of things. And I would say, number one is probably saying, given the tech industry and kind of the popularity that we have in conversations in California, but it's number 3. And number one, surprisingly, was Nevada. I did not think that Nevada would be number 1 on the list, but they are. And so, but with that being said, I mean, obviously some of our core markets, right? We're up and down the West Coast. We have members in, every single state, 32 different countries, but we have the majority of our membership obviously on the West Coast. And we look at those top 7 states that have crypto, most are going to be in states that we have relationships in. One of the exceptions is I think tied for 4th place is New Jersey. Obviously, we don't have any relationships over there, but there are those concentrations, and you start seeing the numbers tick up. And you got to say, okay, look, this is something we should pay attention to. And then we started tracking about our cash flow. So we started looking at what kind of transactions were our members making, and we started discovering, hey, our members are moving a good bit of money in and out of our organization with different third parties. and that could be good or bad. It definitely poses risk to our membership. It would be a lot easier, more convenient for them if we had a solution in-house. And so we started looking at different solutions. We started working with we're part owners in a QSO called Members Development Company. Fantastic QSO, has about just almost 80 owners in it. Average size credit union is about 4.5 billion, about 500 billion in assets total in the QSO. And so it is, from there, we had a project committee that we doing research. The research then led to, further projects where we looked at dozens of providers and then narrowed it down. But through that process, really got educated and about how it was going to work, technology, the risks, the regulatory framework. And so from there, obviously, you put all that together, it's something that we would have interest in and we're moving forward on. And I'm not sure if they were ahead of the curve, but definitely something that we think that our membership has and is currently using, and something that we can help support them in their endeavors going forward.
That's fantastic, and that's a great overview. I think we have a lot of credit unions that are listening in that are probably interested in to unpack some of that. So if you don't mind, let me circle back to something you said earlier, where you were noticing the amount of your members that were actually engaging with these third-party cryptocurrency platforms. So, is that like an active study that you did, or how did you go about identifying some of those metrics to say, hey, we have this much capital maybe flowing out to a third-party exchange, or we have this many members that we see engaging with it? What were some of those heuristics that you were noticing early on when you were evaluating this?
Yeah, we love data. We're a bunch of nerds at University Credit Union. I mean, and it kind of suits us, right, with who we serve and what we do. But we love the data, get into the research, trying to figure out, trends that are going on. And so, our CFO, our finance team did a fantastic job isolating the analysis and looking at, what are, where is the money going specifically by vendor, and then how much is going out and coming back in. And so we're looking at, what does that just intermediation look like with our deposits? And it's quite substantial, and there's some good rules of thumbs out there. I think SRM in our industry does some more metadata and industry level data around research, and can give you a good rule of thumb. And I forget their rule of thumb. We were a little bit higher than what the rule of thumb was that they used for the industry based on their research. And so for us, I think the number should have been around, 4 to 6 million a month. And we saw some months where it was significantly more than that. And so, some months we were seeing numbers that on an annualized basis would take us, considerably into the 9 digits if that trend were to continue. Now it didn't, because again, it's transactional, right? So that money comes back and forth, but it is something that we're paying attention to. And again, when you look at, our membership, the ownership, as I mentioned before in California, it makes a lot of sense for us to have the solution in-house. It makes it more secure, it makes it easier. And then of course, with the solution that we chose going forward, we're really excited about the periphery of what that could happen as well, not just crypto.
Yeah, and that makes complete sense. I'm really excited to talk about some of that periphery here later on in this conversation. I guess just to really help others that are listening understand what that timeline looked like. Obviously, launching a new solution like cryptocurrency to get that internal buy-in is probably going to take some time, right? But when did you really notice for the first time that, hey, some of these third-party exchanges and fintechs that are offering crypto could be a threat? And I guess when did that happen? And how long, I guess, did it take you to get to the point where you were having more serious conversations about potentially bringing in crypto?
Yeah, I mean, through some committee work with NAFQ and different organizations, we started seeing some questions getting asked, and that was during 2019, 2020. And then from there, we started saying, okay, look, let's really lean into this. But when the project launched at MDC, that's what we released. And that project was over a year-long project. This is not something that was just, okay, let's do a 90-day research project, build a business case, throw a project plan together, and let's get live. When you have this kind of level of risk, this kind of level of volatility, you have to be extremely thoughtful, both, and I'm not even getting into the legal agreement side of things. Our lawyers always like to make things fun, but we want to make sure that we protect the organization, protect our membership. And so having those kind of controls in place, understand what the member experience is going to look like. And then in many times, because credit unions and banks have stayed away, whether it was for regulatory concerns or risk concerns or whatever it might be, or just not a good fit at that particular time that will grow into it. I think, a concern for me was, what does, the cybersecurity aspect of things look like? What did those kinds of issues really approach, and from a member experience as well, right? So I want to know what that member experience can look like, but I didn't want to have to compete with the crypto provider. And so that's one of the things that we looked at was, you know what, are they in the business with just serving institutions and are B2B, or are they also in the business of dealing directly with members and clients as well? And so it's a B2C solution. So now we have this, you know, partner that potentially is torn, where they're incentivized to go directly to the member and not through a B2B channel. And that was an important decision for us because we didn't want to have somebody that was constantly looking over our shoulder, trying to figure out, you know, what business are they trying to grow into. And so again, just, you know, because we want to make sure we have the resources dedicated and focused on developing this going forward, because even to your point, 2009, even 14 years later, I think we both agree that this is still at the very beginning, right? We're still in the infant stage of where this could go and over the next 10 to 20 years.
Yep, I completely agree. And I think, I mean, some of the events that happened last year, I think we really seen, you know, some of the shakeout and some of the fallout from that shakeout. But I think ultimately it's, at least in my opinion, will make the industry stronger to get rid of the bad actors, and then have these bad actors really bring in into focus how you know, traditional financial institutions like credit unions can help actually make this a safer place to transact and hold digital assets as well. So you know, in your opinion, from the FTX elephant in the room that I feel like we have to address today, you know, what do you see as your credit union's role in helping to keep your members, I guess, cryptocurrency in a safer place than with one of these unregulated third-party exchanges?
Yeah, I mean, it's a good point. And obviously we have our due diligence process, we have our ongoing due diligence process, we have our, you know, our vendor management process, we have, you know, regulatory oversight as well. So all these things are coming together to help make sure that the solutions that we drive are safe and sound for our member owners. And, you know, these are, you know, things that, you know, somebody that's working with FTX or an individual that was involved in, unfortunately, in that bad actor, you know, so to speak, what they probably weren't doing was regular due diligence, right? I mean, if you know, they weren't getting into the nitty-gritty, they weren't following the cash flow, they weren't trying to, if those things were happening, and again, maybe that's in the future, maybe there's, you know, this is something that spurs regulatory oversight of the industry. But I think that's one thing that we can provide our membership that others wouldn't see going direct and doing it on their own.
Yeah, I completely agree. And I think the crux of it is the qualified custody piece, because that requires the cryptocurrency partner, in your case, to be regulated, which is the big difference, I think, from FTX, where they weren't regulated at all and they really had free reign to move cryptocurrency around to their personal accounts and, you know, buy the mansions in the Bahamas and everything else, which obviously led to the demise. Whereas if it was a regulated institution, then, you know, that necessarily wouldn't be the case. So I mean, that's, I think, sort of been my thesis as well, that, you know, with a credit union being a regulated institution and a partner with qualified custody being a regulated institution, the chances of, you know, these things happening are significantly reduced, and ultimately just creating a safer environment for credit union members to transact. And yeah, I think that's part of the feedback that I get a lot too. Is, you know, credit unions, you know, tend to be, you know, sometimes nervous about cryptocurrency, but if your members are going to be doing it anyways, you know, you may as well provide them a safer environment to do it. And it's sort of been my thesis there. But
well, and potentially give them more options too, right? So I mean, through a custody option, you might have, instead of trading one or two coins, you might be able to trade, you know, again hundreds, right? I mean, theoretically, all of them, you know, if you get in down to, I mean, I don't know what the latest numbers are, but I think last time we spoke, you said something like 17,000 or something.
There's a crazy amount of cryptocurrencies out there. I actually think that's bad for the industry overall, because, I mean, by and large, most of those 17,000 or whatever the number is, are not coins that I don't think most people would recommend investing in, because they're so volatile. And there are, you know, still a lot of you know, scams out there for those smaller cap coins. But you know, having an environment where you can at least offer the larger market cap coins that are less volatile and have been around longer and more established, I think is you know, generally what we hear credit unions being interested in. So
and you know, solutions that we looked at, again, and yours in particular, I mean, the freedom to be able to move money back and forth, it's easier for our members with these solutions today to move money back and forth to their primary, where primary account was, checking account, whatever the account might be, back than even our investment services, right? So, that's something that you think about, the ease of use and kind of setting the bar, and then also working with our other partners, say, look, this is the experience we're trying to drive towards. And in particular, like I'm talking about, like, around wealth management.
Yeah, no, I completely agree. I mean, the liquidity aspect of it is huge. Being able to get credited for sell orders, I mean, pretty much instantaneously versus having to wait 3 to 5 business days for those funds to be transferred back from an exchange to your credit union, right? I'm supposed to be asking you questions here. I know I'm offering a lot of my own opinions, but I think one other one that's worth pointing out too is just the KYC process, right? I mean, you're going to trust your personal information with your credit union much more, especially post FTX, much more than you are with a third party, exchange that may or may not be regulated. In most cases, probably not regulated too. So, any thoughts there?
I mean, the fraud. I mean, just the fraud alone. I mean, I think anybody that's on any social media, anywhere, LinkedIn, otherwise, we've all been tried. There's always these fraudsters that are trying to hit us and then try to show us about different crypto strategies, and then get us involved in some area where they can, obviously, social engineer our likelihood of passwords and whatnot, and then ultimately hack the accounts and steal, right? And so these are things that are concerned. We are seeing fraud in that area that supposedly was not supposed to be fraud happening because of all the way that it's designed, and we are seeing it. And so I think, working with your regulated, federally insured financial institution to ultimately, choose this path is good. I mean, and also from a provider basis to our membership. And right now, my only choice for our members, if they came in and said, hey, I want to trade currency, or I want to get involved in crypto, or I just want to at least put a little bit of money in it because I just want to pay attention to what's going on. The only option that we can give them is through our investment services department, where they can buy an ETF, right? I mean, they can buy the Bitcoin ETF, and that's the only real option that they have right now. And that's really not the same. You know what I mean? And so, you're buying an ETF that's basically using derivatives to replicate the volatility and the performance of the underlying cryptocurrency, and in this case, Bitcoin. And that's just not the optimal experience. And so we're excited about the solution. We're excited about what it's going to do for our membership, and a safer environment. And we know that they're already in a very large way participating in crypto board. And for us, we have some exciting solutions that we're rolling out this year around that area. I think that's it's really exciting. I think about how the future looks like around technology, and how we're working with retailers, how we're working with merchants around really putting some meaningful bonuses together for our membership, not just 1.5% cash back, but then in addition to that, some pretty significant bonuses, 27%, in some cases, rewards back to our members based on their spend. So again, very, very excited about what that could look like in the future. And who knows what's going to go. I mean, again, one of the things that I think we could talk about too, of course, is the central bank digital currency, something that a lot of people have been concerned about. And I was on a particular task force around that too. That was a very interesting conversation at the federal level.
And that's a great topic. And I guess generally from, CBDCs, I think are a very polarizing topic in general. I mean, what is your view, and how do you think CBDCs will ultimately impact credit unions and credit union members, if rolled out, essentially? And is there anything that could be done if they are rolled out, to optimize for, credit unions still being a major part of the ecosystem, and being able to be a facilitator of some of that for the members?
Yeah, I think we got to look at things on a spectrum when it comes to this, right? So I think you have the one side of the spectrum, you have the cynic, and they're like, it's never going to happen. We have all these other electronic payments now. People can move money digitally all over the place. There's no need for this. This is a solution in search of a problem, and there's no need for this. This is never going to happen, because there's that side, and then there's the other polar side, right? And I'm talking about the other side, and this is going to be where it's like, oh, this is the central bank stepping in and going retail, eliminating all community financial institutions. There's going to be one bank, one currency in the world. It's going to be roll up to that, IMF. There's all those kind of conspiracy theories that are going on. The thing that I want to talk about in particular is the one that was proposed from Treasury this past year. And the thing that's most concerning is that it was designed to be a liability of the Federal Reserve. And when it's designed to be a liability, that means that it won't be a liability that sits on the balance sheet of credit unions or community banks. And the challenge there is, if we don't have that liability, if we don't have that deposit, how can we lend money? And so how can we play our role in the overall economy? How can we be the money multiplier through lending for economic stimulus, economic activity? All of a sudden that changes the entire equation. And so clearly it was withdrawn, and the Fed took our commentary, the Treasury took our commentary on this pretty seriously, as well as the banking lobby as well. But these are things that are really concerning. I mean, if depending on how that rolls out, and there may be something that gets rolled out at some point, but that could have tremendous impact, not just on how the crypto industry works, but also it could impact how all financial services works across the United States and potentially across the globe. So these are things that I'm paying attention to. Hopefully all the listeners to the call are paying attention closely to. It's something of great concern for me. And, I think that, it sounded good at first, like, oh yeah, that'd be great. We just kind of have the stable coin and but then you start getting into it, it's like, wow, they want that to be a liability. And that means we won't have any deposits to lend out. That's a real problem. And we're already seeing what's happening today when we have this severe tightening that's going on and lack of liquidity in the marketplace. It's doing what it's supposed to do from an economic contraction perspective, but it is daunting from a deposit growth, a deposit management perspective.
Yeah, I completely agree with that thesis. Is there any path for our government to be able to play a bigger role? You feel like maybe not through a CBDC, or maybe just doing a CBDC in a different way. But I mean, how do you feel as though like our government could be helpful to help increase innovation, and I mean, obviously remain competitive at a global scale, since so many other countries now are rolling out or looking at to roll out CBDCs?
Yeah, great question. I think for me, I think, when I think about the government, I think about the first part of the word government, right? Govern, right? And so if the government is active or being an active participant in the economy, then who's going to govern the governor? And I think that structurally, we have to understand what role they should be playing. And in my opinion, again, I know we all have different opinions, that they should play an oversight and regulatory role. And that's the role that they should play. They should not be an active participant in the space, in my opinion. There's not a need for it. And it's always, we look at other things that lacks oversight when the government does participate in certain markets. We have issues. And so these are things where I think to really have that arm's length and really look at things from a risk perspective, you see things differently when you're not participating. It's just like, yep. Back in the day, I have teenagers, and when they write a paper and they bring it to me to review, I see things they don't see because I didn't write it. You know what I mean? And so those are, if we really want to make sure that we have a robust economy that's safe and sound for consumers across the United States, that's where we should try to focus those resources, in my opinion.
Yeah, that makes sense. And I think credit unions like yours and others we're seeing either launch or look at launching a cryptocurrency solution, I think are getting ahead of this as well. Because if our financial economy does move towards more of a digital economy, and obviously that's not going to happen overnight, but over the next 5 or 10 years, or maybe it takes longer than that, but how do you see adopting a cryptocurrency solution early on, I guess, helping to either make your credit union more competitive long term, or just being able to provide more services that would essentially do what the CBDC was initially, I think, intended to do, but just being managed, I guess, more so at more of a credit union level or a bank level? I know there's a lot to that question, but
that's that question. The first thing is looking at your membership. When you're having 1 or 3 or 5% of your members, participating in this particular space, maybe you're just paying attention to it, or maybe you discount it. But when you start seeing 27, 33, 35% of your membership start participating in the space, it's something that you better get involved in. And so that's really was a trigger for us, is that we see our membership getting heavily involved, and we want to serve our members, right? We're a member-owned financial cooperative, and they shouldn't have to go somewhere else because we're not providing a service. And we're at a size and scale that we can do that, and we can do that from from being able to manage the risk, from being able to provide a robust experience, and then also doing the research to choose a fantastic partner as we move forward. And so, those are kind of, my opinions on the topic. And so what were the other parts of the question again?
So I mean, let's play out the scenario. If a CBDC isn't launched, You know, with your experience sitting on the committee that you referenced, you know, it sounds to me like the intentions, or at least the goals of the broader, you know, credit union space, or just broader financial community outside of the Fed. You know, if CBDC is not launched, you know, by the government, you know, how do you think credit unions can help further that initial mission of what a CBDC was intended to accomplish, if that makes sense?
Well, I think you know, early mover, right? You're going to get to capture that business. You gain your wallet share. Branding. There's actually branding gains with your membership. About, you know, we're more than just, you know, the legacy, you know, money center bank. We're much more than that. We're here to support you in all endeavors that are financially related. Our goal, of course, is to give everybody in the university community a financial advantage. We can't do that if we're not in the space. I think that's, you know, a main driver of why we're there, why our board is supporting this as well. Why our team members are excited about it, rolling it out. You know, we're you know, it's kind of like the cool new thing, right? We're not just stale credit, we're kind of cool and hip. I mean, as much as a nerd could be, but those are kind of what I think we're looking for. But I think long term, what this could do is, if we do get more and more involved in the space as an industry, not at credit unions, also in the banking sector, and largely across merchants and so on and so forth, it will increase liquidity. And as we increase liquidity, it's going to increase stability. As we increase stability, it's going to increase adoption. And so I think there's a lot of cascading that happens around the benefits that we'll see in the long term. To your point, is it 5 years, 10 years, 15 years? I don't know, but
so do you think if there's enough credit unions and enough banks that launch similar digital asset solutions where these transactions could still be playing out, you know, without a CBDC, I mean, do you think that's a viable path forward long term, or what concerns would you see with doing it at that level?
It's a really loaded question. I would say that from a scenario perspective, there is a scenario that does have a high probability that does play out in that manner. And I think that you look at research that's been put out from UCLA at the Anderson School, you look at research that's been put out by Lamont Black at Chicago. I think you'll see, and he's also a regular speaker at various industry events around the country. I think you will see that is not an unlikely scenario.
Interesting. Cool. Well, let's circle back to some more details then, as I'm sure some credit unions are interested in hearing. Looking at my notes here, some of the topics that we haven't covered. I think one, just coming back to the initial process of getting, you know, the conversation around crypto started at your credit union, where I think a lot of other credit unions are at right now, right? What are some of the concerns? And I feel like a lot of them are obvious, but I'm sure there were some concerns voiced along the way when you were driving this within your credit union. If you could just address some of those, and then maybe talk about how that debate unfolded, and, you know, why you think the advantages of doing cryptocurrency sort of outweigh some of the potential concerns.
I think the big piece for us that will help us overcome is we move together in a collective, in a group of progressive advanced credit unions at MDC in partnership with SRM to do some pretty tremendous research and narrow it down to, you know, it's a very diverse and deep sector when you're looking at partnering in this space. It's more than just a couple of providers that we might see in headlines and industry pubs. And so as we went from, you know, the 35, 40 different providers we researched down to the final 2 or 3, I think that was, you know, we addressed each point of risk. We addressed, and again, we have spreadsheets upon spreadsheets that are, I mean, just tremendous amount. And we, of course, did our risk assessment in-house as well on top of that. But these are things that, you know, made us comfortable through the process, that we were able to go through and have a partner like SRM that could ask questions that we just didn't know how to ask. I mean, you know, we needed to bring in a specialist to do that. And then also through the collective at MDC, you have, you know, again, all these great progressive minded credit unions that come together, and they're going to ask some pretty tough questions, and they're going to challenge a lot of assumptions that are made. And through that process, we came to a conclusion that we got very comfortable with, and then now we're running forward.
Yeah, that's fantastic. I mean, even backing up just a step before that, if you're able to share, I don't know if any of this is confidential, but with a lot of respect for what you're doing at MDC and what the MDC group is doing in general to further innovation in general, but obviously specifically with cryptocurrency. I guess what drove the MDC CUSO to evaluate cryptocurrency, and I guess when did that really come about?
It's a great question. I couldn't tell you the exact dates. I don't have that off the top of my head, but as a research for development company, MDC stays in a constant state of research, listening to members, but also doing their own research on top of that, finding out, what are the industry wins that are happening that we need to pay attention to, and then as that happens, they start having conversations, surveys with owner credit unions. And then from there, it rolls up into a project. And once it hits that project state, that's when you really get to see the magic that happens at MDC. And I'm not here to do a commercial for them, but it is one of the best organizations that we're part owners in. And from the project state, then from there, typically we'll deliver, an insult around a project. For us, the state one was going to be research, and then step two was going to be, is it a negotiated process for all MDC members and pricing and so on and so forth. So it really is a powerful group to be a part of. And there's others in our industry. There's plenty of them out there. Kian has one, and again, there's a variety of different ones out there. Again, MDC is just one that we went through on this particular product, and we've done that with a couple other solutions as well with MDC, and again, the partnership that we were able to have with SRM through that as well really did help, in this process.
Yeah, I know SRM has been a great advocate for the furthering the innovation of cryptocurrency with credit unions in the space, and I would recommend them as well. If there's any credit union looking to start this process and you don't have the benefits of a larger CUSO to help you with that, SRM is probably a great resource to turn to. I guess on that topic, I mean, any other resources that you would recommend for credit unions listening that are just getting started really with this evaluation process?
Well, I mean, I think for anybody that's a member of MDC, you have access to the research from MDC, right? So that's really available. It's in our owner portal, and you can access everything that we did over the past year and a half in that particular project. And also it was just, it's discussed at the owner meeting and so on and so forth. So those things and I can only talk so much about that because it is confidential to the owners.
Sure.
And,
yeah.
And I'm trying to dance around what I can say and can't
Sure.
say.
You're doing a good job.
Yeah. So, but that's kind of where we're at with regards to my recommendation. If you haven't done that, I would search out. Feel free to catch me on LinkedIn. I'll talk you through specifics about what we did. I can point you some resources. I do think SRM was a good partner in this endeavor, with regards to Larry over there, does a really good job and can help educate, whether it's education at the board level, education at the management level, or whether it's actually doing partnering to look and search for different, do an environmental scan and ultimately come to a conclusion of if it's right for you, not right for you, and which partner you should go with.
Yep, absolutely. And I guess speaking of the partner evaluation, was the decision made first that, at MDC, you're going to do cryptocurrency somehow, eventually at least, and then the partner evaluation came second, or was the partner evaluation also part of the decision whether or not to launch cryptocurrency, if that makes sense?
Yeah, so that one was, is this even something that we want to get involved in, right?
Mm-hmm.
Is there enough interest for us to move forward? And that's where a lot of the numbers that we talk about came about, right? So, credit started doing research. Okay, how much of money is going to Coinbase? How much of my money is going to crypto.com? How much is being transferred in and out of the organization? What does that member activity look like? And then from there, or CryptoFi or anything else. And so then the solution started, and then from there, there was a huge groundswell, and that's when I said, okay, well, what does this environmental scan look like? Can we narrow it down to some providers? Can we provide some education back to the member owners around, what does the landscape look like? Who are the best players out there for us? And based on our criteria and then also provide all the risk assessments, the research, and the whys behind it, so to speak, to the member owner, so they can make a decision for themselves of how they want to go forward.
That makes sense. So drilling into some of the specifics of the vetting criteria when you were evaluating It sounds like there's a large amount of different potential partners that are out there, and you narrowed it down to a few before determining us ultimately, which we're very happy with, obviously. But I mean, what was some of that? What were some of the key criteria that you looked at when evaluating your potential cryptocurrency partners?
You brought that up, and I'm gonna bring up the spreadsheet so I can be very specific.
Appreciate it.
Second. It had nothing to do with the fact that you were in San Diego. That has nothing to do with our choice. Second. There are some great providers out there, and there's some new providers, right? There's new ones coming every single day. We had to, there were times where we added people to the list that we weren't planning on, that we didn't have. For some reason, it's not loading. But we looked at, I think it was a few dozen different providers when it was all said and done. And I'm gonna have to. I'm not gonna be able to give you the.
That's okay. No worries.
But
any broad strokes or themes that you noticed?
Well, I mean, for me personally, it really was. Are they strict B2B? Are they a pure play, or are they gonna have a what's the old Russian proverb? If you chase two rabbits, you'll get none, right? So I wanted to make sure that we had a company that was going to be focused, and that they were all in on one path, and not be torn about how do we provide and acquire clients directly, but then also how do we work in the B2B space. When they're working in the B2B space, they're going to listen to us, credit unions and community banks, about what our needs are, what our clients, what our members' needs are, what does that member experience look like, the interfaces that need to be developed, the then periphery and ancillary solutions that could come along with that. And so for me, that was a major criteria. I didn't want somebody that's going to just plug in and say, okay, look, here's some Bitcoin, buy and sell. And we want somebody that's going to look at, what is this going to be a long-term provider? How can we buy, sell, transact, transfer, right, across wallets? And that was one of the major criteria for me personally. I can't, there was a lot of other criteria around risk. So we did a full risk assessment, covering almost any level and every level of risk that you can come up with. And then came to, just like every other decision, every other project, right? We had the scorecard, we had ratings, everybody went through and did that in the committee. And then from that, we did our average scores. We had our maps that kind of show us where everybody scored and how, and also showed some, whether divergent opinions or was it pretty consistent on different metrics. And so those things all happened from a process perspective. And again, my personally was more at the strategic level. What did that look like? What does the future look like? I don't want to just make a choice today and then have to add another solution tomorrow and another solution. Can we have one partner that's then going to grow with us and continue to lead strategically over the next 5 to 10 years?
Yep, sounds good. And just by the way, we got about 19 minutes left. We'll probably go for another 5 or 10, and then we'll stop for questions. But just unpacking that a little bit, I think you mentioned one of the specific key things you're looking for was not just the buy, sell, and hold, but also the transfers you mentioned. Why is that important to you?
Again, I think you look at, how are people going to move assets back to your solution? Right now, and if you don't have that option, there has to be a liquidation, transfer, then a repurchase. That could trigger taxes. That could trigger any number of things. It does increase risk, right? Anytime you start moving money across the board. So again, all those things are of concern. And then I think you start looking at, to your point, how do people start gifting money? How do people start, gifting coin and working in that environment? There's so many different things. You start walking down how we operate in the legacy world, right? The analog world versus how we're operating. We apply those same kind of activities in the crypto space. Now all of a sudden you start seeing why that's so important.
Yep, that makes sense. And one other thing that I wanted to get your take on specifically was the custody aspect of it, because as you know, we at CryptoFi, we go to market intentionally decoupled from the custodians, and we partner with who we consider to be best in class digital asset custodians in the space. And part of the reason we're decoupled is so we can provide the flexibility for the credit union to ultimately bring custody back in house eventually, or switch their custodian if there's ever concerns with them. But Have you thought about long term, at least? Probably not going to be in the short term, I would imagine, based on other feedback that I've gotten. But long term, I mean, is that on the table? Bringing digital asset custody in house? Has there been any thought there?
I mean, not our current size and scale. I mean, it's something that
Yep.
we kind of said, look, is this something that we could look at doing in the future? Possibly, but we said the same thing about, whether it's our wealth management department, you can talk about insurance agencies, you can talk about all those, when we lean on third parties for different services to our member owners, these are things that we have to consider, right? What does this look like in the future? I think right now it makes the most sense to use a third party to do that. And
Of course.
but down the road, is there a scenario that plays out? Yeah, sure. That's definitely on our scenario roadmap, but it's not something that we have any plans for the next 5 years.
Yep, that makes complete sense. Okay, so skipping ahead then, when this actually does go live, which we're obviously very excited about, what are some of the key things or a key value that you're looking to get out of this program? Which I guess could be part of the reason you're doing it in the first place. But is there any specific metrics you're going to be tracking and evaluating as to, hey, this is working well, or it's not working as I expected? What are you looking to get out of this?
So I think we're going to track like how much are we bringing in from outside that's currently in the market, not just what's going to come, from new business from our organization, but also what are we transferring in. It's going to be very much an assets under management kind of approach, very similar to what our wealth management is, but then also tracking where's the activity coming from, where's that growth coming from, where's the AUM coming from, but then also tracking, what does the halo effect look like? For those members that work with us in crypto, what, do we see the increase that we're projecting around that we've experienced with other products and services that, as we have, as they engage with us in that space, do we see a lift in lending? Do we see a lift in primary checking account use or checking account activity? Do we see those kinds of things? And that's where, again, our data area in finance underneath our CFO is really going to be digging and diving in and tracking that type of data. But we don't do anything with dashboards and scoreboards at our organization. Everything has KPIs and ultimately ROIs attached to them.
Absolutely, that makes complete sense. And I'll just offer a quick story that you may have heard already, David, and I think others have heard me speak before. It's one I like to tell, but part of the motivation, behind starting CryptoFi in the first place was because I was actually using Robinhood at the time. This is back in early 2020. I was using Robinhood at the time to buy cryptocurrency, and at the time I was also getting ready to go through the home buying process for the very first time. And so most of my assets, being a crypto fanatic that you might guess that I am, were tied up in cryptocurrency. And when I went to go show my credit union that I had enough money to be able to make my down payment, cryptocurrency was nowhere on my Robinhood statement. And so I tried to show, my banker the app, like, hey, I have this much money, I can afford it. And they're like, yeah, I'm sure, right? And so that was a big point of friction for me, because what I had to do was I'd sell my cryptocurrency on Robinhood, triggered a taxable event like you referenced, which I didn't want to do. And I had to transfer that fiat back to my credit union. Took 3 to 5 business days, but worse, for AML purposes, I had to sit there for 60 days before I could actually use it as proof of funds for my mortgage. And so there was a house I wanted to buy at the time, and I did not get that house because of that specifically. And so, you hear like cryptocurrency increasing like a lending business. It doesn't necessarily mean that you have to like lend against crypto or use it as collateral, but just having it in your ecosystem to be able to let members use it as like proof of funds for that exact scenario, so they could go and sell crypto when they're ready to make a down payment, and you as the credit union believe them that they actually have it, right? I think is another area where you're going to see a lift too. So I just think that's a good story to tell and interesting to point out. But have you thought about it all, like lending on the roadmap? I'm sure it's a little ways down the road, but
I have, and I didn't sleep for a week. And then it is something that we have looked at. Our chief lending officer and I have had discussions, Corey McDaniel, and so we're trying to figure out what does that look like. We're paying attention what the industry is doing. Obviously you're not lending on a dollar for dollar basis, right? So from a collateral perspective, so trying to figure out what does that number look like. We're not prepared to go forward with it today, but it is something that we are building into. And as we go forward with this initiative, obviously we'll have even more data that we'll be able to track. We'll have more at our disposal. We'll have to be more involved in the space. And so as our education and our research increases, our comfort level and understanding of what that risk is will allow us to manage, mitigate, transfer, or insure that risk.
Absolutely. All right. Well, this has been a fantastic conversation. I do want to make sure we leave time for questions, but any closing thoughts, David, before we get to questions around cryptocurrency in general or in the credit union space?
Yeah, I mean, I think you just, if anybody's on the fence on this, I would have start doing some research. You know what I mean? I would talk to Kian. I would have a conversation with those participants, and you're going to find out that it's probably a little bit easier and a little bit less risky than when you're originally anticipated. And there's a lot of credit unions and banks that are already in the space that you can reach out to and find out what their experience were and address some of your concerns, especially right now when you're talking about deposits. And, like everything else, I mean, right now, as we are in this extended winter, I guess you would say, in the crypto world, things are always in and out and up and down, so to speak. And so, I think, if the market does come back and you're not in that space, you're going to be in a different position than if you're in that space prior to the return of maybe a spring or a summer for the crypto industry.
Absolutely. I mean, I know for a fact we've been put through the ringer by not just your credit union, but many credit unions and SRM and everybody else. And so that's what I would say too, is it's not as scary as what it might seem just by reading the headlines if you actually dive into some of those details. And we are in the crypto winter right now, but these solutions do take time to work through this whole process. And you don't want to be left behind once we emerge out of this crypto winter. And all the credit unions that did take the time to get ahead of it are going to be in prime position to be able to take advantage of that. And I guess one last point that I forgot to mention earlier too, I think one of the things that the good things that are coming out of FTX is the SEC now seems to be looking at cracking down on a lot of the unregulated exchanges. And if they don't have qualified custody, potentially banning them in the US. And when that happens, where are those users going to go, right? They could go right back to your credit union, which could be an amazing opportunity to be able to acquire new members if you have a solution ready to go. So, all right. Well, I think we got about 10 minutes left here. Caleb, who I know you are helping to host this with us, do we have any questions?
Yeah, one question that actually did come in earlier when during registration. How is CryptoFi or how are credit unions kind of protecting, less educated or perhaps elderly or otherwise other groups that they don't necessarily want to take out a ton of risk in crypto assets? So how are you protecting them and helping them learn more about cryptocurrency?
I can speak to our solution first, David, and then would love to hear your thoughts as well. So, I mean, these are all things that we put a lot of thought into our CryptoFi before we decided to go down this path to make sure that members had the resources to make responsible investing decisions. So for us, it's really twofold. It really starts with education, right? I mean, if you can provide the right educational resources through the credit unions, banking apps that they're accustomed to engaging with, then they're going to have the tools that are at their fingertips to be able to do the research and make informed investment decisions. And if you're providing the right resources, there's going to be better outcomes. And one of the other tools that we're built into our platform is a recurring purchase, which essentially allows the members to dollar cost average the price of the cryptocurrency that they're buying. So if you're buying regularly, say, once a month, over time, that price is going to be averaged out. And, zooming out at the cryptocurrency markets, over the last 3 years, 5 years, 7 years, has been the highest performing digital asset, volatile in between. So the dollar cost averaging tool is something else that we built in. And then, of course, disclosures. We have very robust disclosures that are built into our app, not just the terms and conditions, but every step along the way in the members' journey. We're displaying the potential risks that come around with cryptocurrency. It, of course, is not FDIC insured, although the custodians do have insurance. But those are the things that we really like to do to really do our best to help keep members educated and informed about the risks of cryptocurrency. But David, I'd be curious to hear your take.
I mean, all of the above. I mean, obviously at University of Creighton, we're going to start with education. And then also, I think you can't, there's going to be a pretty robust speed bump in the experience. And in that speed bump, we'll be addressing risk and making it transparent and very clear, to the member what they're doing, where they're going, and what the risk associated are with that. And so that would be another process that we do to make sure that we protect our members' owners.
Awesome. Other questions, Caleb?
Yeah. Other than speculative investment for members, what other sorts of digital asset use cases are you thinking about for credit unions in the next 2 to 5 years? What's on the longer term roadmap?
So I guess I'll start briefly again. So, and I think for us, rewards is a big one. So instead of getting, say, cash back on your purchases, getting Bitcoin back or Ethereum back, whatever cryptocurrency you want back on your purchases, we're excited about being able to allow members to use cryptocurrency to make payments, both at merchants and do peer-to-peer transfers with. And then, something else that we're excited about long-term, I think, is, more asset tokenization. There's more to digital assets than just cryptocurrency. So, thinking about tokenizing real hard assets, such as like the deed to your house potentially, and, other things that, could be interesting to evaluate long-term. But David, curious to hear your thoughts there too.
I mean, all of the above. I mean, obviously, in a dream world, I'd love for blockchain to replace the DMV. I think we all could. And there's no reason why I can't when you think about how that could work as a central truth of record, right? So whether it's your house deed or whether it's a car title or whatever it might be, those kinds of things I think are exciting. Obviously, the years ago when we, this is early, maybe 2013, 12, smart contracts, the dream of that happening. We're getting closer to it. We're getting closer to when that could happen, where our member chooses a car, the car gets delivered, everything happens and transfers automatically as certain, activities are met, and then money automatically is transferred and moved around. And so those are things that, love to see happen. I mean, I think that's not too far-fetched. There's some things out there today, but this is, something that I think you look at for tomorrow. And it's exciting.
Absolutely. What else we got, Caleb?
Yeah, another question submitted earlier. Are credit unions looking at providers offering, insurance for assets and more protections for their members, kind of in that regard? And what do you both feel is important along those lines?
You want to start there, David, or I'm happy to?
Start. I'll take it. I'll take the second. Go ahead.
All right. So yeah, I think insurance is incredibly important. And, fortunately, like I was referencing earlier, the qualified custodians that CryptoFi has decided to partner with, which in turn are the qualified custodians being used by University Credit Union and other credit unions that we're working with, they do have insurance on their digital assets now. It's obviously different than what the FDIC does to insure deposits, but having insurance on your digital assets, I think, in addition to all the steps that the qualified custodians have to adhere to, all the internal risk controls and how the wallets are structured, et cetera, ultimately lends to a very safe and secure place for credit union member to be able to hold digital assets, and the insurance being the backstop. So it really depends on what qualified custodian you're working with, but there are significant coverages. I've seen anywhere on the low end, $10 million, on the high end up to $250 million of coverage. And I think where most credit unions are starting, there should be some sufficient insurance coverage to cover most, if not all, of the digital assets that are being held in whatever wallets are being used. So.
Yeah, I think the only thing that obviously there's always the risk of loss, right? I mean, right now there's the insurability, the products and services that are out there, even options to hedge against that risk are limited or they don't exist. And so, as this space develops, we'll continue to look at those options for our members and make sure that we have those options provided so that way they can better manage the risk in this space.
Absolutely. Maybe one or two more, Caleb.
Sure thing. So do you have an expectation, or did you do any research that leads you to believe that adding crypto to your credit union offering will expand the market to a younger generation, or more newer investors and newer people in the financial space?
Go ahead, David.
I mean, we have survey data, and I also have direct interaction data with our student body, as well as some of our younger employees, team members, nerds at UCU. We talk about trading all the time. At one point, one of our team members, early 20s, trading Dogecoin. He was making, $6,000, a week on his trades. He was so excited. That went away quickly. He was less excited, but that was there is data that shows that there's interest there from the younger generation, but also I think there's a lot of secondary research. So you don't need to do all the primary research yourself. There obviously could be limited data sets depending on what your, the profile of your membership. But there's a lot of secondary research out there. I mean, and from reliable sources. I mean, we're talking about CNBC, NBC News. You can go out there to Google Scholar and look at some academic research in this space. There's a lot to take in, but you will see, yes, it does skew younger, but there is participation across the board. I mean, our average member at UCU is 51, and we're seeing usage across the board, across different personas with our membership.
That's a really interesting data point. All right, Caleb, last one. What do we got?
Sure thing. So obviously custodian security, wallet security, all that seems pretty important, and we've covered it a few times already. When you're evaluating vendors or custodians, is there any specific types of security you're looking for, or specific criteria there? Thinking about perhaps cold storage, other things like that when it comes to crypto.
Yeah, I'll start there, David, since we did a lot of that vetting, I think, on the front end. And, for us, it's making sure that they're the right regulatory, compliance is there first and foremost. Almost every credit union should have at least a SOC 2 audit done, if not a SOC 1, in addition to and maybe other compliance certifications on top of that, which I think lends to the right internal processes being in place. But then, yes, wallet structure is a big one, whether it's MPC or a combination of hot, cold. I think we're seeing a lot more custodians move towards MPC wallets, which I think have the benefits of both, cold storage with some of the hot wallet functionality. And then, insurance is another big thing. What coins can they custody and offer liquidity on is another big one. Obviously, is NFT custody something that they're currently doing or on their roadmap? Can they support, cryptocurrency deposits coming in and withdrawals going out if needed? So there's a lot of different criteria. Those are some of the key ones I think that we looked at. David, any thoughts there?
I mean, they're the same questions that we asked in our research and our work and our assessment. So echo everything that you stated there.
Yep. All right. Well, I think that concludes our session for today. Thank you so much for your time, David, and we're very excited to move forward with this with you, obviously, and for everyone else that's listening here, we will. The recording did get cut off, I think, halfway through, so there's probably going to be 2 separate recordings coming out after this. But if we can merge those, Caleb, let's try and do that, and then regardless, we'll get those recordings out to everybody. And if there's any questions, absolutely feel free to follow up with me. I love talking about this stuff, so don't hesitate to reach out. And then, David, any closing thoughts on your end?
No, it's again great to be here. Thanks for having me on the podcast. And again, if there's anything else that I can do to help anyone that has questions or curiosity around the space, and as we continue to grow in this space, we're happy to share what we're learning and what we're experiencing. So I think it's something that if we can get, you get your contacts, you get your network in this space, I think we all can benefit from that. So please feel free to reach out. And other than that, I wish you best in your journey.
All right. Very good. Good to see you. Thanks, David.
Thank you. Have a good day. Bye.